Today, I'm going to be talking about the impact of technology on the foreign exchange market. And before I delve into that, I would love to share a personal story that provoked my interest in the financial markets. In 2017, I was with a friend in New York, and we were having a conversation on how to make money legitimately. And he suggested a couple of vendors we could venture into. And the one that caught my interest was the foreign exchange market. So I started learning about it. And I realized that it was highly lucrative. And if one is really passionate and patient in pursuing the knowledge of the Forex market, one will actually come out or make profit from it. So that provoked my interest. I started learning about how to trade. Then I watched videos online, and I saw a lot of persons, they were advertising that you can teach me and you're going to charge me and all of that. I was deeply convinced that what I should do was to buy goods and follow it patiently, because while I was learning about the forex market, I was also paying attention to testimonies from other persons who ventured into the forex market. Some later gave up, while some remained consistent in it. So I learned from their personal stories that this is what I'm going to do. But I placed patience as the number one strategy in learning the forex market. Now, over the years, there has been a major shift in the forex market from manual trading to highly automated, technology-driven trading style. Now, we have retail traders and institutional traders. Before the advent of technology, both retail traders and the institutional traders relied on paper charts, and this is when they extract information from news and they are plotting the graph manually in the paper, and they have to constantly update that, which was very challenging. But technology has made it very easy and possible with the evolution of platforms like MetaTrader 4 and MetaTrader 5. So the Forex market is the largest financial market in the world, exceeding $6 trillion traded per day. And to participate in the Forex market, you have to have a profound understanding of the market. Because what you're actually doing in the Forex market is you are buying the currency while simultaneously selling the order. So a lot of persons venture into it just like I did. Then I realized that while I was concerned about making money legitimately online from the Forex market, it follows strategies, systems, and financial principles. Then I was able to conclude from that observation or realization that this is not gambling, as some people believe that it is gambling, that they deposited their money and they lost everything. So I realized that there are two ways to effectively analyze the Forex market and make profit from it. So we have the technical analysis and the fundamental analysis. Now, the technical analysis focuses on looking at price charts, historical price data, using leading and lagging indicators, moving averages, and some softwares like you install in your MetaTrader 4 to make an informed decision. While the fundamental analysis focuses on economic calendar, interest rates, basically what is happening in a country's economy. It could be like a political event. It does not involve looking at the chart. You're paying attention to what is happening in a particular region to make an informed decision on trading. Now, a lot of persons, when they go into trading, they just deposit their money and they're trying to make funds, trying to make profits from the market without paying attention to the structured and define the principles that needs to be followed while trading. So you can either choose the technical or the fundamental approach, and you can combine both of them. But I was more interested in the technical analysis aspect of it. So I was like, okay, I learned price action, I read about candlestick charting patterns and different trading strategies that could be technically implemented to make profit from the Forex market. One of the things that that interested me was the price action, naked trading. It's just basically understanding institutional traders, what they do in the market, and how I can also learn that, just trade with them. So I started trading, and I started making profits. I started trading in 2017, but I was using a demo account. Demo is not real money. It just deposits money in the MetaTrader 4 platform for you to trade as though it is real money. So even if you're trading with real money and you're making profit, it's going to be the same. So I practiced from 2017 to 2020. And it was in that 2020 I moved into a live trading account with actual money. Then I started trading, and I was experiencing some losses in the market. Then it got to a point I gained an edge in the market. I was making consistent profits. Then it occurred to me that is there no way that I can implement my strategy into a bot, that is a trading bot, where I will not have to do anything. I will build it, then I will train it based on my strategies. Then even when I'm sleeping, it will automatically scan the market, then it will execute trades and close it. And now in Forex trading, there is what they call stop loss, and there is what they call take profit. So even while you are sleeping, you can manage your risk. You can decide that you're going to lose 1% of your money, and you're not going to lose more than that. So I was concerned about how to develop a trading bot that will implement my strategies, but I do not know how to do that. So I started learning programming. I started with Python. Then I realized that people use C++ as well. So it was the desire to develop my own trading bot using technology to make money from the Forex market that provoked my interest in computer science, concentrating in software engineering. And that's why I'm studying that in Chicago State University. So when I realized that technology has become an integral part in trading, as a lot of persons, like some persons will develop a trading bot and they don't have to spend much time looking at the charts. They spend their time they're relying on their trading bots. Then I realized that even with those trading bots, there needs to be an implication of sophisticated bots, because a lot of persons will develop some trading bots like they are not well trained. You can buy, they sell it at a courageous amount of money. You can buy it, and before you know, like you might not even know what is happening, and you're losing your money and all of that. So, and a couple of friends reached out to me that he spends about 2 million naira learning how to trade, and he bought some trading softwares that was supposed to help him become a billionaire, and he has lost 2 million naira. Then I reached out to him that I said, you do not need all of these. You can actually build yours, because a lot of persons are concerned about teaching you how to make money And in the process of teaching you how to make money, they are making money. Their own money comes from teaching you and not necessarily from trading. So I created a trading platform where I was training people for free and as well giving them signals for trading. So when I started my own trading platform, I was reliant on technology as well. So instead of me to just merely use MetaTrader before, there was another software that was developed. It is called the Trade View. I logged into that platform trying to see how technology could save me time, because sometimes I spend like 2 to 3 hours looking at the charts. I wake up at 3 a.m. trying to understand what is going on in the Forex market. I mean, my first experience was really bad because I deposited my first paycheck and I lost everything in 10 minutes. But I wasn't discouraged. I continued again until I deposited another. Then I took that from 3 figures into 5 figures in just 20 days of trading. And that was when I realized that this is something that I will continue because I have seen the prospect of it. And I believe very strongly that doing it and teaching others will be of great advantage to me, coupled with the technology that is deeply impacting the Forex market. And when I started building my trading robot, of course I'm still in the process of it because I believe more in price action trading, following the supply and demand trading strategy that is prevalent in today, which is what a lot of traders are delving into. Some people call it the smart money concept, liquidity, and all of that. Well, I would love to think of it as trading with the big boys, because the Forex market is dominated by the institutional traders. The retail traders could barely do anything. Their trading volume is pretty small and it cannot move the market. So if you're trading Great Britain Pound and Euro USD, I mean, the market is bullish. That means if it is going up, it means that the institutional traders are in control of the market. So if you trade against them, you're going to lose your money. So you can use indicators like moving average, Bill Williams, fractals, and alligators, which I don't know if anyone is familiar with that, but this is Forex, so I'm just explaining. Those are just indicators that I will tell you that, okay, this is what happened in a previous week. Even if you just started, it's telling you that this is what happens, and you can rely on that information to trade speculatively that, okay, last week this is what happened, and it's possible that this week, but there is no indicator that will tell you 100% or definitely that in the next week this is going to happen. But you can make an informed decision following those lagging or leading indicators. Then AI have also been incorporated into trading. Now, when you use AI to analyze the Forex market, if you're using the default version, some will still rely on past information or past data to give you. They might not necessarily, the AI might not necessarily tell you what to do, or some will, AI is like the ChatGPT 0, the paid version is pretty helpful in making decisions in the Forex market. So you can use that, and you can as well use the DeepSeek. So even if you do not know anything about the financial market, be it stocks, cryptocurrency, and all of that, you can still make use of artificial intelligence to guide you, not to rely on it, but if you don't completely depend on artificial intelligence, you have to use it to guide yourself, and you'll gain an edge in the market. Then I would like to also talk about blockchain incorporation into Forex. Now, when you create a Forex account, and there are concerns about security, your money can be fraudulently taken from your accounts. Some brokers are not regulated. Now, brokers, I mean that those are the platforms, they're like intermediaries between traders and interbank. So you cannot trade Forex without opening an account with a broker. So, and for you to make a decision on which broker to use, of course, you're going to pay attention to leverage, execution speed, cost, and you need to be sure that a broker is regulated because your money can be fraudulently taken from you. So blockchain is incorporated to ensure that there is security, there is protection for the forex trader, and even when you're trading, you can be confident that your money is not going to be fraudulently taken from your account, especially when the broker is regulated. So this is how technology has been incorporated into forex market. It helps with technical analysis and fundamental analysis, and there is another that I call the sentiment analysis, because trading is deeply psychological. Now, even when your trading strategy is good, you get very emotional when trading. So you could be making, let's say you enter the trade and you are in $500 profit, but you do not know when to stop, when to take your profit, when to stay in the market. And in the process of that, some persons might just take their profit too early. Some will close their trading positions too early because they cannot tell for sure, oh, I have made $1,000. What if my profit drops? That is the psychological aspect of it. When you are able to master the technical and the fundamental aspect of it, the psychological aspect of trading is much more important, because even when you know what to do, then you have to control your emotions and believe that this is the strategy you're using and it is consistent with the principles governing the forex market. So this is how technology has deeply impacted the forex market. Indicators. Others rely on trading bots, that is automated softwares that will automatically trade for them even while they're sleeping. But what I have experienced from the forex market, what has worked very profoundly for me is the concept of supply and demand. Now, the concept of supply and demand, this is I have applied that strategy to the live accounts. Some people call it the smart money concept, but you're basically trading with the institutional traders. Those are the major movers of the forex market. So if you can understand how to spot where there is a major trading volume or where there is a liquidity in the market and you trade with them, I think you're going to be consistently making profit, even though it's not going to be 100% of the time, but you're going to make more profit than you will lose following the institutional traders. That's what I've been using. Like I said earlier, you can combine it as part of your trading, but not to be completely reliant on AI. Because sometimes even when you know that this is like you have a little understanding that this is what should happen, this is what you expect, and if AI gives different information, I think it is better to stick with your knowledge than what AI will give, because you just make use of AI to complement your trading, not completely depend on it. But it's good to make use of it. Yeah, combine it.